Welcome to Shortview Trading. My name is Chris Watling. I'm the CEO and Chief Market Strategist of Longview Economics and Shortview Trading. And this is your morning market hit for Monday, 24th of June. It's around 9 a.m. London time. So if you want to trade equity index futures, you want to trade S&P 500 futures or NASDAQ or DAX or equivalent equity index futures, what do you need to think about? What factors should you take into account if you want to trade them on a 1 to 2 week basis, either long or short? That's what we're going to dig into in this video. So, is tech in trouble? That's the key question you've got to ask at the moment. If you're a holder of all these terrific Magnificent 7 and NASDAQ stocks, should you be starting to get nervous? As we came into early last week, it was pretty clear tech had a very good run. Just look at this chart we're putting up in front of you now, dividing the S&P 500 into its three key areas: the cyclicals, the defensives, and the long duration growth area. Of course, long duration growth is primarily tech and other growth stocks. And what you see is that they had a terrific run since the late April lows. On April the 19th, the S&P 500 hit a low for the month. Since then, tech and long duration growth has had a terrific performance, putting on around 27% up to the beginning of last week. Now that's a mighty performance in the case of 8 or 9 weeks, illustrating how strong the run had been. And no wonder, as you came into early last week, tech was overbought. Look at our NASDAQ technical short-term scoring system that we're putting up in front of you now, clearly generating a sell signal earlier last week. Or another indicator we like to use on the NASDAQ is look at its 10-day moving average to its 50-day to give a sense of how overextended the momentum is in the short term to the upside. Equally, that also gave a sell signal early last week. And indeed, it wasn't just the indices that were overextended. Also, look at the key leadership stocks. A number of single stocks were really overextended to the upside. Nvidia, of course, the great performer of 2024. But if you look at its overextended indicator, it started to signal sell last week. This is an indicator that you can see in front of you now, where we look at the price of Nvidia relative to its 50-day moving average. In other words, the 50-day moving average is trending up. Nvidia is trending up even faster, and it's got a long way away from that trend line, which is a bit of a support level. So when that gap opens up wide, you get a signal on this indicator. And as you can see from the chart, when you get a signal, you tend to see the stock, Nvidia, either trade down for several months or at best trade sideways. So in other words, pretty punchy signal that's consistent with what we see in the indices being overbought, the tech indices themselves being overbought. And you can make similar comments about Broadcom, the sort of second liner, the competitor to Nvidia, also up a ton this year, also overextended at the start of last week. So as we came into last week, things are pretty cooked in the tech area of the market. Pretty overextended, overbought. It's been an exceptionally good run in recent weeks. And it's little wonder, therefore, that you've got a key day reversal in these indices at the back end of last week. Now, what is a key day reversal? Well, basically, a bearish key day reversal is when a stock's been trending up for a considerable period of time. It opens the day at a new all-time high, intraday high, and then it closes the day below where it closed the day before. In other words, momentum continues into the start of the session, and then it fades pretty sharply, and we start moving below where we were in the prior day's trading session. That's a bearish key day reversal. It typically signals a change in trend. And we had that on the Philly stocks and the NASDAQ at the back end of last week. Interestingly, in that respect, whilst momentum in tech's been very strong, overextended to the upside, toppy, in the DAX, we've had the opposite. In fact, DAX momentum model has been back on strong buy in the middle of last week. And if you look at the relative of those two, the momentum of the NASDAQ versus the DAX momentum, you can see we're at very extreme levels, rarely reached in the last year or two, as you can see from this chart in front of you now. So in other words, there's some pretty unusual behavior in the stock market at the moment, with certain parts selling off as other parts make major new highs. So to see how we're playing this, please take a trial, click on the link below, and you'll receive the daily risk appetite gauge for free, which will give you our recommendations, our feel of the market, all the models updated every day, all the key ones in your inbox early morning London time, each and every business day. Or if you're a subscriber, You should have the email around 8:30, 9 a.m. London time. So what are we watching this week? Well, keeping a close eye on those Eurozone government bond spreads. They were pretty quiet last week. They were very dramatic the prior week before that. This week is the run-up to the first round of the French election next weekend. So what the market does in terms of pricing and risk, you'll see it in those Eurozone govie spreads. Keep an eye on them. They're critical. They're a risk premium proxy for European equities. That's the first key thing. Second key thing, there's lots of pieces of US macro data coming out this week. Conference Board consumer confidence, durable goods orders, and the Chicago PMI. You'll remember, of course, Chicago PMI last month fell dramatically deep into recession indication territory. Will it stay there? Will it bounce? What will it say when it's published on Friday? That's a key piece of the equation. And then finally, we're also watching some data over in Europe. You've got Eurozone M3 money supply. There's also a bit of earnings data out this week, including FedEx in the US, which is always critical as an indicator of the global economy. So that's it from us. That's your morning market hit for Monday, 24th of June. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click subscribe and like and share on social media, or follow us on Twitter, LinkedIn, and or Facebook. Thank you for listening. Stay safe. Trade well.